Welcome back to our discussion of GDP. We are going to talk about a different interpretation of GDP than what we have been talking about previously. So we know that is the um, GDP is the market value of production of all final goods and services in a country in a given year. But what is produced is sold, and so now our task is to sort of account for who is buying American made GDP. And this task essentially is called national income accounting. It is done for the American government by the Bureau of Economic Analysis. Um, who buys American GDP? Well, first of all, you and I. That's called private consumption expenditure. When we go to Target or we go to Macy's or place a huge order on Amazon, we are essentially spending our income on consumption expenditure. The next important buyers of American made goods and services are businesses. This is called private business investment. The government is a really important player in the American economy, and so are foreign countries, because a lot of American made goods and services are sold to foreigners. And so we have to account for all of this. This equation here is called the national income accounting identity. The left hand side is GDP, it's the production side, right? How much is produced in a country. The right hand side is the expenditure side, how much is consumed within a country and who consumes it. So a table like here, this one, gives you a really nice overview of the different heads of expenditure in the American economy. So we'll come back to that in a second. Let's move to a quick discussion of the four important heads of spending. So consumption, as I mentioned, this is you and I when we go to Target and buy consumption, products for use in that very year. Okay. We could buy flip-flops and jeans and t-shirts or bananas or milk. These are non-durable goods and services consumed in a very short period of time. Or we could buy cars, or we could buy laptop computers or a fridge, which the services of the fridge are consumed over a very long period of time, and these are called durable goods. Right? Again, two terms that make you sound really smart: non-durable goods, ones that are consumed over a short period of time; durable goods that are consumed over a long period of time. And of course, the other important head of consumption is that of services. When I hire a babysitter, or when I go to the mechanic to service my car, or when I go to the doctor, or when I use an accountant to do my taxes, that all is part of services. So the table here shows you how important are these various heads of expenditure for the American economy. We find that durable goods account for 13 $1,300 billion. Non-durable goods account for $2,600 billion, and services account for $8,000 billion. Right. So again, it's a very deep insight into the structure of the American economy, that $8,000 billion worth of spending is on services. So the American economy and consumers in the American economy are more and more spending their limited income on services, not so much on apples, oranges, flip-flops, and t-shirts anymore. Overall, private consumption expenditure accounts for $12,000 billion. That's 68% of the entire GDP of the United States in 2015. The total GDP was $17.9 billion, of which $17,900 billion, of which $12,200 billion is private consumption expenditure. And so this kind of helps us understand why, when people say that consumption is the engine of growth in the American economy. Yes, it is, because 68% of GDP is going towards consumption. That is why figures on consumption are heavily tracked by both by policymakers and by investment firms and businesses, etc. Because when private consumption in America falls, you know that the economy is headed towards a recession. The next important head of purchase in the American economy is private business investment. I just want to point out that this is business investment. This is different from financial investment. When we use the term investment, we think of taking our savings and buying some stocks and bonds, etc. That is financial investment. This is not it. This is when a business buys final goods and services to produce even more goods and services in the future. So when you want to set up a restaurant, and you have to say you want to make gourmet pizza. In that case, you want to import a really expensive $8,000 oven from Italy. Now that oven is essentially what we call a capital purchase, and you have to make that purchase before you can produce and sell the first pizza, right? And hence, this purchase of this oven would be called private business investment. So when Amazon buys a massive campus in upstate New York with land and warehouses and factories, etc., it buys it in 2019. That is, this is a capital purchase that is counted as part of business investment in the GDP of 2019. And of course, the fulfillment center that Amazon wants to set up there might become operational only in 2021, 3 years down the line. But we have captured the fact that Amazon purchased a final good or service in 2019 in the GDP of 2019. A weird accounting rule over here that I probably should point out to you is that business inventories are counted as part of investment. So the idea here is that, suppose you are have a cutting edge boutique and you've ordered, say, 10,000 orange pants, right? You thought orange was going to be the color of the summer of 2019, and you ordered 10,000 pairs of orange pants. Unfortunately, orange didn't take off, and now you are stuck with 8,000 unsold pairs of pants. Anything unsold for a business is part of its inventories. And how do we account for it? These pants were produced, 10,000 pants were produced, 2,000 were sold. So what do we do with the remaining 8,000? What we do with the remaining 8,000 is we put them in this category called business inventories under investment. Why investment? Because the hope here is that you as a business owner keep those 8,000 unsold pants in 2019, keep them until the summer of 2020, and then you sell them. In which case, you are purchasing 8,000 pants in 2019 in order to sell 8,000 new pants in 2020, and hence inventories are considered part of investment. Another weird accounting rule that you should remember is that housing is part of private business investment. Now, I know that we buy houses to live in them, most of us. That is, we are consuming housing, but it's just a rule that housing is not considered part of consumption. It is put as part of private business investment. And also, just to remind you, only new housing is part of private business investment, not old housing. Why? Because anything old or used is not actually part of GDP at all of the country. Just to take a simple example, if you purchased a car for your just to go back and forth from school, so it's a consumption expenditure, and it's a brand new car. It was produced in 2019. You purchased it in 2019. It's all set. But if you purchased a old car or a used car in 2019, say the model of the car is 2015, so the GDP of 2015 already accounts for the production of the used car. In which case, if you count it again in the GDP of 2019 because of the resale, then you are double counting. Okay, so this is a general rule, whether you're talking about investment products or whether you're talking about private consumption products or anything else. Used products are not part of the GDP of the given year. Let's see what other two heads of purchases are left. Well, the first one is government. The government is an important player in any economy. The government provides us with a whole bunch of important services, and they have to buy goods and services in order to provide us with those services, like defense or roads or schools and so on and so forth. So when the government provides us with government purchases, let's go and see the accounts for the United States. We see that government purchases are about $3,000 billion, or 17.8% of the American economy. And private business investment accounts for a similar amount, about $3,000 billion out of 17.9 billion, 17,900 billion dollars, and so about 16.8%. Okay, so now we can see how important the American government is. The magnitude of the American government in GDP is the same as the magnitude of private business in GDP. So if there is a government shutdown, or if the budget for the U.S. government does not clear both houses, or if there's some other type of political problem, we see that the American economy could really face headwinds as a result of these political maneuverings. Okay. The last sort of important entity that buys American goods and services are other countries. Okay, we sell a whole bunch of American products to foreigners, but the problem is we buy a lot from foreigners as well, and so we have to account for that. This concept is comes under the fact it's called net exports. Essentially, the volume of exports that we buy from other countries minus the volume of the volume of exports, that is the amount of value of products that we sell to other countries, minus the value of imports, the amount of products that we buy from other countries. If we sell a lot to the world, then we buy from the world, we have what's called a trade surplus, and net exports is positive. On the other hand, if we buy a lot from the world and we don't sell them too much, we have a trade deficit. Okay. I'm sure you might have read or heard of the phrase trade deficit. America has a trade deficit. We buy too much from China. We buy too much from the rest of the world. This is a problem. We are sending our income abroad, and so on and so forth. Let's have a look and see how important is how big is the American trade deficit. So out of $17,937 billion worth of GDP, $2,200 billion is our exports to the world, and $2,700 billion are our imports from the world. Okay, so just these numbers together, contrasted with $17,900 billion, show you that the external sector, or our interactions with other countries, are actually not that important in terms of the size of the American economy. Now, if I take net exports minus imports, I get a deficit of $531 billion. Very big number, except that it is just 3% of the total GDP of $17,937 billion. What does this mean? This means that the internal markets in America, right? Internal markets where consumers buy American goods and services, where businesses buy American goods and services, and where the government buys American goods and services, are so big that our foreign interactions actually become very small and kind of almost inconsequential relative to the overall size of the economic activity within the political boundaries of America. right? So out of $17,937 billion, $12,000 billion is just private consumption. $3,000 billion is investment, and another $3,100 billion is government expenditure. Okay, and hence, this sort of exercise, this national accounting exercise, allows us to assess any statement or any kind of polemic that we hear about the trade deficit. America has a trade deficit. We must do something about it. Okay, but how big is the deficit? And what our numbers show is that our trade deficit is actually very small relative to the overall size of the American economy. So this kind of is sort of concluding our discussion about GDP. It's a really important and quite simple, actually, measure of a complicated idea, the size of the of an economy, right? And GDP is a very useful concept. We're going to use it all throughout, not only us, but like the Federal Reserve and the president and the G20. Everybody uses GDP, but that doesn't mean that this measure is perfect. It has some really severe shortcomings. The textbook has a really nice discussion of the shortcomings of GDP. So if you're interested, and I hope you are, please go ahead and read that. I'll just give you a broad overview, and some of these shortcomings, maybe you've come up with them already, right? So the first important shortcoming is that GDP doesn't include the production of anything that is not sold. Okay, so if you mow the lawn in your parents' house, that's not part of GDP. If your father had hired the neighbor's kid and paid him $40 to mow the lawn, that would be part of American GDP. So that's a little unfair. Just because you decided to, help out your parents and mow the lawn for them, why is that not a valuable service that is accounted as part of GDP? Okay, and the mowing the lawn is a small example, but there is lots and lots of production of services in particular that happens in an economy that is not sold. When I cook for my child, I am not charging for my time. When I look after my child, I'm not charging for my time. When somebody stays at home to look after sick parents or some other sick family member, they're not charging for their time. But that doesn't mean that that service is not valuable, that we shouldn't include it. Okay, so this broadly GDP excludes non-market goods, which are any goods or services that are not sold actively in the market. It's important in America, but it's obviously very important in poor economies or subsistence economies. The other thing that GDP ignores completely is the underground economy. There's a whole bunch of production and sale that happens that, it's of maybe illegal stuff or that stuff that you don't want to pay a tax on, etc. That is economic activity that is occurring, be it the production of drugs in America, be the production of illegal guns in America. It is economic activity, but just because it's illegal, people don't declare it, and hence it's not part of GDP. The other part of the underground economy is sometimes that businesses are producing legal products. Okay, they just don't want to pay taxes on them, and this happens a lot in developing countries. Now, this part of the underground economy is actually very important. That when businesses hide legitimate legal production because they don't want to, pay taxes, or they don't want to avoid paying a bribe, etc., this economic activity becomes hidden and is not reflected in GDP numbers. And this is very important for developing countries. So there are estimates that for developing countries, about 45% of their GDP is kind of underground. So when you are looking at GDP numbers for Bangladesh or Sudan, those numbers severely underestimate the magnitude of economic activity. And even in the US, about 10% of GDP is underground. Even American GDP numbers are not fully accurate. The other thing that GDP ignores, of course, is very important issues about living standards, which also include environmental quality. And I'm sorry about that. Environmental quality and leisure. Okay, so production involves sometimes inherently involves some kind of pollution, and that deteriorates the quality of our environment, and that should be counted or should be accounted for when we think about gross domestic product. Okay, um, the other thing is that GDP essentially counts how much is produced. It doesn't count how it's produced. So, for example, there are countries that have really high GDP, but their people work really hard too. So, in South Korea, the average work week is 46 hours. In Netherlands, it is 28 hours. Now, Netherlands may have a smaller GDP compared to South Korea, but in which country do you think people are better off, right? And so, again, GDP is a useful concept. It is just not a perfect concept. And in fact, there are other measures of environmental quality, of living standards, etc., that economists use to supplement the information that we get from this one central number, which is the gross domestic product of an economy. So, I hope you enjoyed this series of videos on chapter 6. I'll see you when you are watching the videos for the next chapter. Take care.